everyone, it is Evan here from the Trade Risk on Wednesday, October 9th. We are intraday right now, and this is our weekly trade ideas video where we bring you some of the names on our watch list, stocks that are holding up well, showing some relative strength, and ideally are not yet too extended in their moves. As always, these videos are powered by our partners over at Investors Business Daily. We're curating ideas from their stock lists. You can get access to their stock lists with a link in the description of this video. So we got 5 names we're looking at this week, 2 from our watch list, or really one stock idea from our watch list, one just sort of overarching market landscape idea, and then 3 names from IBD's list. So we're going to kick things off with the S&P 500, and this is sort of the thought process that I'm using right now, and we sort of touched upon this in yesterday's market recap video if you happen to catch that video. But the S&P really has stagnated here and gone sideways to a little bit volatile over the past week of trading. Certainly last Tuesday, Wednesday, Thursday, we had big ranges all around last week. And the way I'm sort of framing out the S&P 500 here from the perspective of a swing trader is that I want to be cautious while we're in this chop. So I just put this line on here. It's about this 2940 to 2950 zone. It is exactly where we stalled out last week and kind of reversed Monday of this week. So this is kind of the upper end of the range I'm looking for the market to get back above, to start acting more healthy, more bullish, and get some of those momentum trade setups back in favor to the long side. And on the flip side, to the downside, I'm really using somewhere between last week's lows and the August lows down here around this 2855 to call it 2842, this general area in here. So they're both kind of zones that I'm looking at. They're not precise levels, but while we're in exactly where we are right now in the middle of this range, I do want to be very cautious here as a swing trader, buying strength and selling weakness, because we are in this sort of sideways choppy market. VIX is a bit elevated right now. So that's sort of the lens that I'm looking at this market with. I want to be cautious. I really want to try and transact at the extremes here, and I want to look for some type of eventual breakout for some continued strength in that direction, or weakness in the lower direction. So that's how I'm framing things out. That's the way I'm looking at this market, and that basically means lots of sitting on my hands and really just planning and watching stocks set up and potentially look for tactical opportunities. So with that said, and with that as the backdrop here, EHTH, this is the one idea that comes from our watch list. And if I switch over to this board here, this is one that had this great run up in the second half of, or the second quarter of this year into third quarter, June, July, August, had this nice run up and breakout to new highs. And now you can see it is basically given this all back in just the same amount of time since August, September. We are right back to this lower end of the range here, back from February, March, and April. So what I'm looking at here for EHTH is it is certainly quite extended here to the downside. It is now about 50% off of its highs here. So it basically got cut in half in 2 months. So I wouldn't want to be a hero here. I am looking for more signs. We can see volumes picking up. It's coming back into support. We've got some momentum divergence. So I'd be looking for this 53 area, approximately the lows in from earlier this year, to start to potentially firm up and get some get some bulls kind of bidding in this area. It could overshoot. Again, I wouldn't want to be too quick to jump in here yet, but it's just kind of at the spot where I want to start paying closer attention to it. So 55 or so, or $54, that's what I'd be paying attention to in EHTH for some type of just a reversal setup, maybe a dead cat bounce, but just some opportunity to sort of react back to the upside. So that comes from our watch list. The next 3 names all come from IBD's list. First is PayPal. We haven't talked about this one in quite a while here. It's not ready yet, but the way I'm sort of reading this is A name that is also in sort of this correction pullback territory here. It's about 19% off of the highs, all-time highs in July. You can see it tried to carve out some horizontal support in here around this $103 level, and that did sort of coincide with some prior levels, shorter-term levels back earlier this year. You can see we're sort of underneath that now, and the way I'm kind of framing this out is if this can start to break above this channel, if this can start to get back above 100 and call it $3 above the trend line, back above the August lows here, that would be interesting to me. There's some momentum divergence going on here as well. So if PayPal can start to break some of these recent slopes that it's been moving down in this channel, then I like this as a potential again, at least a reactionary, a trade back up to the upside. Not saying the bottom is definitely in, not saying it's just time to load the boat and buy blindly, but I think if you're tactical about some of these things that have been selling off, there's some opportunity here. Just know your levels and know, basically how you're going to engage in this trade. So PYPL, that's the first one there. Number 2 is GLOB. This one here has been acting quite well, and you can see it's kind of firmed up here. Got a good amount of momentum divergence going on. Almost looks like some type of inverted play here on the shorter term time frame. This here is only about 15% from its highs when it selling off from its prior all-time highs. It was in a very strong trend for this year. Had a nice healthy kind of pullback correction. It has put in some type of sideways base, and it's firming up against this 96 resistance. So I think for this one here, just look for continued stabilization. The more time sideways, the better in my mind, but back above $96 or so, and we could start to trend back to the upside. Last but not least, we have a breakout setup here in JCOM. This comes from, again, IBD's list, and you can see if we zoom out even further here, this level has been in play for a long time, going all the way back to 2017. This $92 zone here has been resistance. It's been where the stock has repeatedly topped out. You can see it is ignoring a lot of this recent market strength. It did have a very swift kind of pullback here early August of about a 13% move downward, but it very quickly got back up to these highs, based out a little bit, and now it's starting to break out. Volume is light, but it is making a pretty big move on a long-term time frame. So JCOM, some strength, some relative strength there, and something to consider. So that's it. That's what we got for this week's Trade Ideas videos. We got 4 stocks and then the S&P 500 roadmap that we talked about at the start of the video. So as always, thank you so much for tuning in and watching. Every Wednesday, trade ideas just like this. You can subscribe on our YouTube channel or check us out at thetraderisk.com. All the action going up there in terms of videos and blog content. So have a great rest of the day, and we'll see you on Friday for the market recap video.